everyone, welcome back to my channel. Today's topic is about money matters. Okay, so it's about where to put your liquid money, meaning those like 6 months to 1 year of income. Where are you supposed to put it at? Bank accounts, or should you go to those like insurer bank accounts or others? So let's go. Yep, so this is about where to put your liquid money. So what is liquid money and why should you have liquid money? Is obviously for like cases of emergencies, or you need it for short term. Next time you're going to use it for a reno, you're going to do your house down payment, that kind of thing. So yeah, usual amount of liquid money that one should have is about 6 months to 1 year of salary lah. Yeah, okay. Next. So why is there a need to find the best way to stash your short-term cash savings? Why? Because obviously inflation is at an all-time high. In fact, even if you stash them and all those things that I'm going to share, it's not going to beat inflation. But yeah, that's what you're supposed to do for your cash lah. Just like barely beating inflation or near the inflation rates. Okay. Yeah. So you need to need this money to be liquid so they can access it whenever you need it. Okay, we also need this kind of money to be stable and safe, so you don't want your renovation, so you cannot start doing renovation, right? Yeah, so need to be stable and safe. So, i.e. not using crypto earn. Please do not use crypto as a short-term cash savings thing. Okay, and also one good thing is that now there are good rates everywhere thanks to the Fed. Okay, so if you didn't know, the Fed raised interest rate by 0.75 percentage points recently. Okay, so what are the product types available? So one very first type would be either savings account or fixed deposits. Okay, next will be those kind of insurers offering savings account, and another kind will be like Singapore government T-bills, which is about 6 months to 1 year. Okay, there are also other product types that they term it as fixed deposit or like similar to fixed deposit, money market, don't know what. All these types are actually non-guaranteed and less safe, so I will not go through this. I'll just like show you what are the things available, but I will not go in depth about whether this is how safe or whatever lah. Yeah. Okay, so based on this chart, you can see obviously the most liquid one is savings accounts and fixed deposits, because you can take it out within 5 minutes or less. Okay, so fixed deposits, yes, you can take it out very fast. It's just that you might not earn any interest on it if you take it out before the fixed deposit expires. Okay, so you definitely can take it out. Insurers saving account, usually they will charge a fee for you to take it out, or it will not be as liquid as your savings account. Like you can do a transfer immediately and you will see the money immediately. That's not as liquid, a bit less liquid. So it's usually you will be able to take it out within 1 hour or within a day lah. Yeah. Okay. Next is Singapore government T-bills. So this is actually not that liquid because technically if you buy it, right, then you need to sell it in the secondary market if you really need money lah. But the good thing is it's only for short term, really for 6 months to 1 year. Okay, so it's tradable. You need to go down to the bank and do the transaction. You usually need 1 business day minimally for you to sell your T-bills lah, if you want to sell it on the secondary market. Okay. Others later I'll share, but you usually at least take 1 business day. Okay, so for savings accounts and fixed deposit, right, the interest rate it gives ranges from 0.05% to 3.4%. Okay, and then as in what is available now as of 3rd October 2022 lah. Okay, then for insurance saving account, it ranges from 1.5% to 3%. Actually it's lower, maybe 1.1% to 3%. Okay, for SG government T-bills, last time when the yields were super duper low, it could go to like 0.2 or 0.3% to about 4%. Currently now it's about 3 point something, but I don't know whether it ever go to 4, but it can possibly go to 4, so I will put it ranges to 4%. Okay, then for those others less safe money market, don't know those sci-fi, all these offer one, so it's about 1.5% to 3.2% lah. Yeah. Okay, so recently today there's this article saying Stan Chart joins other banks here in raising savings interest rate. So they are saying that their account can earn up to 4.88% per year. Okay, so let's find out whether it's true lah. So this article also, I think it's probably sponsored because it's like telling you how you can qualify for it. But okay, so they also share the other bank accounts that are like fighting for your money lah. So I will go through them now to see which one is better. So this is my own summary that I did myself. So it will show all the different banks like Bank of China, CIMB, Dbs Multiplier, Maybank Save Up, OCBC Bank, and Standard Chartered and UOB one. Okay, so all of them will show the base interest rates first. So you can see if you are just comparing base interest rates, right? Definitely CIMB Fast Saver is the best at the moment. So 0.8% just for the base interest rate. Okay. Then for the rest of the categories, you can read yourself on how you can earn more interest rate. Okay, so basically salary credit is very easy lah. You just look at your income range and then you can qualify for how much more interest rate. Then you can look at a bills category, gyro category, whether you actually pay your bills using gyro. Yeah, then you can get an additional interest rate for some banks. And then some banks require you to increase your save lah. So save is increase your monthly balance by a certain amount, then they will give you the additional interest rate. So you can read accordingly. It's been already summarized here. Then card spend. So card spend between certain amounts or more than certain amounts, it will give you how much additional interest rates. Then if you actually do investments with them, then they give you how much interest rate. Do note that for investment and insurance, right, this extra interest rate only applies for 12 months after you buy the investment or insurance. So it's technically they give you 1 month bonus of interest rate, that's all. So I believe most people don't actually do investment and insurance with banks. And another thing about investment or insurance with banks is like insurance, maybe if you do it with those relationship manager, they may change from time to time. They can change jobs anytime. So yeah, so that's one of the concerns. And then these people will not be there for your lifetime lah. So quite hard to. I mean, personally, I wouldn't buy bank insurance. Yeah. Okay. Next, we move on to the last category, which is grow. So grow is basically if you have a certain the bank balance is more than certain amount lah. So usually for people who are cash holders, yeah, so not many banks actually have this cash holder thing, but yeah, if have, you can go for it. Okay, so I will now analyze between all the banks which one is the better bank account for you guys. Okay, so like I mentioned, I shouldn't do any investment insurance with banks because extra interest rate is only for 12 months. Okay, so I'll be basing it, this analysis will be based on the average Singaporean demographics. Okay, so your gross median salary should be about 4,000 plus, so you're earning about 4,000 to 5,000 per month. Okay, then assuming you're currently at 30 years old, your savings in your bank should be around maybe 100k in cash. Okay, so I'm assuming a 100k bank balance. Okay, then for spending, usually per household spending is about 4k plus per month. So per household will usually consist of a mother and father, right? Or I don't know, 2 individuals at least. So a person will spend around 2k per month. So if you spend 2k a month, it's quite impossible to spend all 2k into one card, right? So I would believe a person's card spending is less than 2k. So that's all the assumptions that I'll be doing when I analyze all the different bank accounts. Okay. So if you're using the Bank of China Smart Saver, okay, these are all the bonus interest that they will give. Then basically based on a 100k bank balance that you have with them, right, they will only give a effective interest rate of 0.94%. Okay, so Bank of China 0.94% is not that great. Okay, so we can look at better ones. Okay, next bank, based on CIMB Fast Saver, so very confusing on how they calculate. So like first 10k earn how much, next 15k earn how much, blah 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 blah. So if you go and calculate, the effective interest rate is actually 1.42%. So CIMB has already won Bank of China. So if you're considering between these two, please go for CIMB if you have 100k. I mean, using the same demographics just now that we went through. Okay, next, DBS Multiplier. I think DBS Multiplier is totally not a contender because you can see the EIR is only, the effective interest rate is only 0.28%. This is the most pathetic I've ever seen. Okay, so this is their calculator. I put my figures into the calculator and then they tell me I will only get 288.35 interest per year, which is very pathetic. So basically they have this thing like if you spend within these few categories, right? So their categories are only card, insurance, investment or home loan. So basically if we cancel out investment and insurance and then we don't use a home loan from DBS, basically we only left with card. So with card and salary, right, if we add up to like like for example card and salary, most likely we can only fall into this category lah. So 1% per annum. Then the remaining, so you can see this is 1%. First 25k you earn 1%. Then above 25k balances you only earn 0.05%. So basically your effective interest rate for the 100k is only this amount. So DBS Multiplier is super sucky if you're a normal Singaporean and not a rich person like this. So if you're a rich person like this, right, it's like 3.5% per annum and you go and fulfill all the three categories, right? This 3.5% is only on the first 2.5% is on the first 50k and next 50k is 3.5%. So it's effective interest rate about maybe 3%. Yeah, effective interest rate will be 3%. But that's only if you fulfill insurance and investments with DBS, which is quite unlikely. Okay. Yeah. Next, we move on to the next product, which is Maybank Save Up. So based on Maybank Save Up, basically you can qualify for their 2.75% if you do any of these nine items. You just qualify for 3, you can qualify for the bonus interest rate. So let's take a look at their qualifying products. So first one is to do a monthly gyro or salary. So this one can be easily qualified, so you can definitely qualify for one. And then the next one is a card spend. Okay, so quite easy to get the 0.7% card spend of $500 monthly. These two quite easy to get. And the next is invest, insure and borrow. All these three is very hard to get, and then your bonus interest period is only for 3 months or 12 months, so it's quite worthless, I would think. So most you can get is this 0.25 plus 0.7, which is effective interest rate of 0.95, which is not very great. So just now when we talk about it, CIMB Fast Saver is still better at EIR 1.42. Okay. Next, we move on to the next bank, which is the OCBC 360 account. So based on OCBC 360 account, right, you have to fulfill certain categories lah. So we can see here how they add certain amounts based on what you do lah. Okay, so if we kick out investment, insurance, we kick out grow because we are assuming 100k in the bank only, right? So the max you can add is only 1.1 plus this 0.7, so 1.8, so 1.85 lah basically. Yeah, if you go back and see, it's 1.85. Yeah, so effective interest rate is 1.85, okay, on 100k. So basically they have a calculator there for you to check whether it's good to invest with them lah. So, not invest, like save with them. So basically you tick the things that you qualify for. So yeah, so this one unticked, so this 3 tick, you will earn this amount per month. So this calculator based on 31 days. So if you divide by 31 days, then times 365 days, you get 1850 lah. So the effective interest rate is basically 1.85. Okay. Next product will be the Standard Chartered Bonus Saver. So Standard Chartered Bonus Saver, if you do the usual, so it's salary credit of 3,000 more, 1.2%. And then after that, usual card spending should be this amount. So you get additional 0.61%. So 1.2 plus 0.61, then plus this 0.07. Yeah, you're just going to make 3 bill payments online lah. Then you don't do insurance, don't do investments. Okay, so basically you can only get 1.88% per annum. Okay, so let's say if you are super big spender, you want to do 2,000 or greater, then you can possibly earn 2.88%. So if you are big spender, go for Standard Chartered lah. So 2.88% is quite good. Okay. Lastly, we come to the last bank, which is UOB. UOB really very confusing rates, but effective interest rate, if you're counting on 100k and you actually do the minimum $500 card spend and credit your salary with them. So it's a $500 card spend and credit your salary, you basically qualify for the this better interest rate lah. Yeah. So I think quite easy to credit your salary with them and do the $500 card spend. So if you actually do that, your effective interest rate is calculated to be at 2.145%. So it's actually the highest if you are not a big spender. So assuming you don't spend more than 2k amount on your cards, right? This is actually the best bank account that you can put your money with. Okay? Yeah, so later I'll give a summary on all the different bank accounts and then you guys can take a look. So the next product will be fixed deposits. So fixed deposits, this one I got from the link called the Wacky Duo. I don't know what link is this, but I believe it's true lah that RHB is offering 3.4%. But this is 2 years lock-in. Okay, so assuming you don't lock it in, you take it out, then maybe they won't give you your interest. But I heard there are some banks that will still give you a fixed deposit interest even if you withdraw early. I'm not sure what banks are there, but you guys can go and check it out on your own. Okay, so next in line will be maybe Bank of China 2.95 or CIMB 2.9. Okay, so I've crossed out those banks that I think the minimum amount is a bit too much because you shouldn't be holding so much cash. Like Hong Leong Finance, they say 200k minimum. Quite ridiculous. This one also 50k. Yeah, so I believe if you're doing fixed deposit, right, you should only put like small amounts like 20k like that. I mean less than 20k, okay? Or maybe below 50k I would think is reasonable lah. Yeah. Okay, next we go on the next product, which is the insurance savings account. So basically I got it from Sydney. What are the things available? Basically it's only Etika and Singlife that are offering this kind of products lah. So you can see a summary of what they are offering. Okay, so you can see here, right, that Dashpad is locked, meaning you cannot withdraw. You can only withdraw 10% during the first year without penalty. So if you are actually using these few insurers, right, you should go for the other products lah. The rest is not locked. So the not locked one, 1.5% is the very highest lah. So Singlife, no withdrawal fee. Okay, so I would think Singlife is the best, but it's only for 10k. So the remaining 90k is only at 1.1% lah. So if you are having 100k, you can allocate it to like 10k here, 20k here, and then maybe the rest somewhere else, because I mean you will have to spread it lah, because you cannot put it all into here because they don't want you to invest so much also with them. Yeah. Okay, so I'll show you guys that recently there's also some bonus interest rates that they are giving, because in line with the new Fed increase, they also want to make sure their plans are still attractive to consumers, right? So yeah. The bad thing about Dash is that they have a 70 cents withdrawal fee, which I really hate. Yeah. And then free if you withdraw to Dash Wallet. It's really a pain to withdraw to my Dash Wallet because you can only withdraw I think they cap it at 2k a month. So like if you put in like 20k, right, then you want to withdraw your 2k, right, then you need to take like 10 months to withdraw. So it's very stupid. So might as well just withdraw at one shot and pay the 70 cents. Yeah. Okay, so they are running this loyalty campaign. So let's say you already have a Dashpad account or Dash Easy Earn account or an gigantic account, you can refer to this to look at your new effective interest rate. But there's a bad thing such that it's like you have to actually lock in this for 1 year. So it's like a 1 year fixed D now. And if you take it out, you only qualify for the base interest rates, which is stated here. Okay. So let's say we are looking at Dashpad or Dash Easy Earn. So it will be the original interest rate is stated here just if you look at the front table. So if you compare the interest rate with the bonus interest rate, you will earn 3.4% on Dashpad for 50k. Whereas on Dash Easy Earn, you will earn 2.5% on 20k, which is the max cap lah. Okay, so if you combine both products, since they are both from Dash, right, it will be an effective interest rate of 3.14 on 70k. But the bad thing is, like I mentioned, this means your money is actually locked up for a year lah. Yeah, so this meaning you cannot withdraw anything from 30th September 2022 to 30th September 2023. Okay, same for the Gigantic. Okay, so Gigantic, I'm not very sure about this product because personally I never used it, but anyway, this one is for a larger amount, so you can earn 2.5% on 200k. Okay, so 2.5% pretty good if you lock it in. Yeah. Okay, next, Singlife also running promotion because they are fighting each other for the market share. So this promotion is if you top up 10k, you get $50. Top up 30k, you get $430. And top up 50k, you get $810. But this is treated as a fixed deposit because you cannot take out the money if you want to qualify for this special incentive. Okay. So let's say now you have 50k inside with Singlife. So you go and top up the additional 50k, then you will earn this $810 cash incentive. So you imagine you put it for 1 year from now lah. Then the original interest that you will earn on this 100k will be 1140. So the total amount you will earn is 1.95. So assuming you're just comparing Dash versus Singlife, then obviously Singlife is losing out in the effective interest rate lah. Yeah. Okay, next product is the T-bills. I believe T-bills are super popular nowadays. Yeah, because of the huge jump in the interest rates. So now it's about close to 3.4% yield. So if you look, when was the spike? The spike started in 4th February 2022 lah. So previously, before that, for the last 3 years, it's been cui. Yeah, only one word to describe it, cui. Okay. Then recently, now it's so attractive, 2.98%, 2.99%. Most recent in September is 3.32%. Okay, so all these I got from the CD website. Yeah, I think their tables look very nice. Okay, so how to invest in T-bills? Basically, you need a bank account either with DBS, Ocbc, or UOB, and you need to link your CDP to your bank account. Central depository to your bank account. Okay. So why I recommend DBS is because you can waive this $2 application fee if you apply through DBS iBanking. Okay, so buy your T-bills, you choose between 6 months or 1 year at a discount. So how it works is like this: you buy at a discount, and then at your maturity value, by the time it matures, you get the full value. So let's say I buy a $1,000 T-bill, then maybe now I buy it for $900, means I get it at $100 discount. Quite unlikely because that's 10% discount, right? Yeah. Okay, so anyway, apply through your ATM or iBanking. So iBanking is preferred because you can do the fee waiver if you are using DBS. Okay, so the prices of the T-bills are determined via auction in thousands. So you can see the interest rate there is actually the cut-off interest rate. It doesn't mean that that is what you will get. So it's all determined through auction lah. Yeah. Okay, so for these T-bills, you are unable to redeem early. So whatever you get the interest rate, you have to accept it. Okay, then you cannot redeem early, but you can sell it on the secondary market through the physical bank branches. This is too troublesome. I don't think I want to do T-bills. Okay, so anyway, the trading volume is low and it's quite illiquid, so I would not call it like super liquid. Yeah. So back to, if I'm comparing all these with like bank account, definitely go for bank accounts. Yeah. Okay, so just now I mentioned there are other products out there, which is all these they always call it like cash smart, but actually technically all these are not cash. Okay, please double check. So all these are like projected returns and not even confirmed returns. Okay, you can see non-guaranteed. So yeah, please take it with a pinch of salt. What you see there is cash on actually. Yeah. Okay, so like I mentioned, there will have a conclusion on all the different products. So definitely using bank accounts is best. So if you are doing bank accounts, go with either Standard Chartered or UOB, okay, depending on your income and your spendings. Okay, Then if you're doing fixed deposit, go for RGB lah, 3.4%. Then T-bills, yeah, please try it in October, maybe you'll be very high again. And then the Fed mentioned that it's going to continue raising interest rate until inflation gets, you know, level. So probably in future T-bills will continue to increase. Yeah. Okay, then next, yeah, I mean, by all means, if you have more than 100k, please spread them all out, and then can also go for insurance savings account. Yeah, so it's ranking from the most liquid to the least liquid lah, because I believe everyone wants your first emergency funds to be damn liquid, right? Yeah. Alright, that's the end for today. Thank you for watching. Okay, thank you everyone for watching the video. So I hope you guys don't leave your money to rot in some random bank account. Please use the correct bank account. All this has been summarized in just now that summary table. They can see which one is the best bank account for you guys. So if you guys are in the position that 30 years old and have 100k in bank, definitely go for UOB or Standard Chartered. Easy peasy. Okay, thank you everyone. Please help to like and subscribe. Bye bye.